Morning and welcome to Money Matters. We broadcast every morning at 7 a.m. live from Providence, Rhode Island. And if you don't know where that is, well, somebody has called it recently a suburb of Boston. I don't know about that, but hey, that's what they say. So, in today's episode, I have some definitely quite a bit of news when it comes to some business and technology. We're going to be talking about Bitcoin price. Is it set to crash? What's going on in the stock market? And then I also have a bit of sad news that I want to share with you today because I want to use it as educational point to understand what is going on. And folks typically they don't see the dark side of some of the finance and trading and investing. And I want to make sure to address that today. So please do stay tuned for this episode. And good morning. Happy Monday to you. Hopefully you had a wonderful weekend, super productive weekend, and that you done something that you love, absolutely love, that you learned something quite incredible, and that you are doing excellently. Excited for the new week, for the Monday. Can you believe it? It's middle of June, y'all. It is June 15th, and more or less, we are just about done with the first half of the year. I know for some of you are like, yes, I'm done with 2020. I want 2021. So no worries, it will come one day at a time. So right now, I just want to go through and take a look at what's going on in the markets. We're going to take a look at the futures, and you will see that S&P 500 and the futures, it's definitely in the red and it's going down. As you can see, the overall trend, 5-day trend, is definitely on the down. Let's take a look at Dow Jones. Dow Jones is basically doing the same thing. You can see, it might as well be looking at the exact same picture. NASDAQ is also down. It looks exactly the same. Exactly the same. You saw the Thursday, Friday was sort of up, and then it turned down. There's not much happening other than it just going down. Russell 2000, down, 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 down. Let's take a look at a month. See, on the month basis, you see how we had this nice up. It looks like we had early June, the sort of top again, and we started to come back down. So, crude oil down as well. It's all in the red. Every single chart looks exactly the same, y'all. Gold is sort of down. It actually came down today, but you can see that it was a little bit choppy. Let's take a look at over at the month. And over the month period, it looks like in May we were at 1782, and now we are at 1714. 6 months, we're doing pretty darn well. We still haven't reached the March lows of 1400, but it is starting to turn back down, and we do know that while long term, they decouple when there's a big emergency in the market. Uh, the price of gold goes down. This is euro and dollar exchange. As you can see, it is going down as well. Overall, it was going up. It looks like we hit some sort of peak again June 10th, and it's definitely going down now. Overall, on the 6 month, sort of sideways but up. Okay. Volatility index is down as well. This is very interesting. So as you can see, it was sort of not much happening. It picked up volatility mid or like late last week. It is going down as well. Bitcoin down. Everything is down today. It's a red, 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 red day. Even over the course of a month, Bitcoin is down, and we actually have some news and stuff that we're going to talk about that sort of the expectations and what people are thinking is going to happen. I am not shy to have been on this channel and have shared with you that I do expect that obviously everything is going to go down, and that the short term I expected gold as well as Bitcoin to hit much lower levels before we turn back up. So U.S. futures fall, treasuries rise on virus fears, market wraps. So there you go. This is the warning sign. More than 50% of stocks, 60 members are showing a sell signal. This is coming from Bloomberg through Yahoo Finance, and they're basically saying, futures. They said futures sank 1.6%. I don't know that I would call it sinking. Futures sank 6%, 12%, 16%. Yes, 1.6. I don't know that I would call it sinking. But to each their own, I guess. So they're basically, saying that folks are worried about the additional virus sort of emerging, and we do see some of the states where that is happening. So I don't know. We'll see. We'll definitely see. That there's a little bit of a fear kind of going in. Bitcoin slides below 9,000 and sort of goes up and down. So there's definitely pieces that are going to be playing out. The yield on 10-year Treasury sank 2 basis points to 0.68%. The yield on 2-year Treasuries decreased 1 basis point to 0.19%. And Germany's 10-year declined 1 basis point to negative 0.45. Britain 10-year dipped 1 basis point to 0.201. So there you go. Dip, 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 short, short, short. Everything is definitely turning red and negative. And that really brings me to talk a little bit about sort of the impact that this has. And this is the sad news that I have come across that I wanted to share with you in a moment of understanding, sympathizing, empathizing with the family, and really wanting to raise awareness and wanting to spend time educating folks. Long time ago, way back when, before I, got into the markets, lost everything, and I heard of the whole thing of don't tie your net worth to your self worth, and I heard it, but I didn't get it. And when you get into the markets and they go the way that you want them to go, they go into the direction that you want them to go. So if you're short, it goes down, you win. If you go long, it goes up, you win. Those are times that can feel like an incredible high. Those are times where you feel like you are a genius, you are winning, you feel invincible, you feel amazing, right? Like every time we do something that we are connected with, that we want to get accomplished, we end up feeling absolutely amazing. The problem is that the market doesn't always go up, contrary to the popular belief of the current 20 and maybe even 30-year-olds who are playing on Robinhood app, testing and trying new features without completely understanding what's going on, understanding the market. So the problem is that they're going in, they're playing around, and they're not understanding that when market turns, it turns bad. When you trade on a margin, it can be really, really, really bad. And when that happens, oftentimes we connect our self-worth to a net worth. And I'm here to tell you, it's not the same. You shouldn't connect it. And this story is really eye-opening. It broke my heart to read it this morning. And it's a family tragedy as a lesson to all margin Robin Hooders. So here you go. I'm just going to read what basically has been shared. And it says that a Twitter user exposes the very real downside of the speculative mania occurring in American stock and option markets currently. Okay. So this is basically coming. This is the Twitter feed. My cousin-in-law was interested in investing. He opened a Robinhood account and got interested in options. He believed he had no margin selected on his account, so he began buying and selling options. Fast forward to sometime this past week, and his account showed him owing over $700,000. How does a 20-year-old with no income get access to that kind of leverage exposure? This is similar to what we saw in 2005, 6, and 7, right before the crash in the real estate market, where individuals, no job, no income, no proof of anything, no money, no down payment, no future perspective of how they're going to be paid for stuff, but they were getting money lent to them at ridiculous amounts, and that resulted in a giant crash, right? People took advantage of people who don't understand. People take advantage whenever there is a money exchanging hands. Please know and understand that there is a high potential that somebody will attempt to take advantage of those of you who don't understand what is going on. For that reason alone, it is important, it is crucial that you study and learn different components within the economy, business, markets, trading, investing, the whole 9 yards. You got to understand at least some basics. You don't have to be an expert. Nobody expects you to be an expert in everything, but understanding the basics of it, the basic lingo, where to look for stuff is crucially important. But unfortunately, people feel like they don't need to spend any money on education because real estate never goes down. It only goes up. Stock market never goes down. It only goes up. Folks, everything is cyclical. It goes up and it goes down. When it goes up slow. When it goes down, it's overnight. I mean, it just crashes and that's that. So you got to understand some of the basic principles before you just go out there and do this stuff. And I'm sure that this young man is not the only person. So let's continue. The emotional stress from the exposure caused him to take his own life. Please pay attention to this. The markets are bananas right now. It's not the time for amateurs. Really, really pay attention to position sizing. Stay away from exotic instruments like options and futures. Almost everything you see on this platform, meaning Robinhood, is coming from someone with a bias, myself included. Don't pay attention to how many followers someone has, while where they work, etc. Judge investments on their own merit as you understand them. Finance isn't losing your life over. And if you know Robinhood willingly extending way too much credit margin, please let me know. Alex, rest in peace. This this breaks my heart. Nobody, nobody deserves to die because market turned and they didn't understand. So please, I hope you will listen and learn that money is just not worth losing your life over. I mean, I get it that it can be very stressful. Trust me, I get it. I get it, and my heart breaks because I was in those shoes. Maybe not at $700,000, but I was in those shoes because I was doing things without knowing what I was doing. And people in those brokerages, they don't care whether you lose money or make money. They don't. They make money on your trades. Okay. Robinhood does not charge you for it, but they front run you. Meaning, when you go in and you say, I'm going to buy, XYZ stock, okay, by the time you click the buy the button, right? They have gone in with their algos, with their computers, with their machines, and traded at 3 times over. And so the price you see is not the price you pay. And I'm seeing that over at the Robinhood. I'm seeing that at the Coinbase. I'm seeing that everywhere. So you gotta pay attention to what you're doing. It's not easy money, okay? It can be at times, yes. Trading can be profitable. Investing can be profitable. I prefer that folks get into the investing, meaning long-term stuff, as opposed to short-term speculation components, just because short-term speculation, well, it does have a potential to make you put money fast. It also has even greater potential to lose you money super fast, like way faster than you make it. And I think every trader who is honest, who is sincere, will tell you that, you know what? Over time, as you go in it, you might get better at it because you understand how to read the markets. There are some key components that exist within technical trading, but you got to study first. You got to study, y'all. You got to study, y'all. None of us would ever dare walk into a surgery room and operate on a human being without going to the med school and practicing on cadavers for years and trying to figure out and being supervised by somebody and coached. I don't know what makes people think that because they can open a Robinhood account that they all of a sudden they're traders and that they're geniuses. And then you watch and you listen to some sort of idiot somewhere who I mean I don't know if they're idiots, but they're going out there and they're saying like, "Oh yeah, this is what I did." They're bragging so that they can feel good about themselves, so that they can get the name, so they can get attention. They don't care if you make or lose money, okay? They don't. So you got to take care of your own self. You got to take care of your mental health, physical health, financial health. And that starts with paying attention, with studying, with practicing. You know, you want to go into the options and futures, cool. But study first of how they work, what they are, and do as they call paper trading. Ever heard of that? It's basically when on paper you go and we watch a market and you do it for months. You do it for months before you put a single penny into the market. Where you take a piece of paper, you're looking at what's going on, you're reading the charts, and you mark down your positions to say, I would have entered here, I would have exited here, and see what happens. Because when you do it on paper, it's like doing the real thing, except you don't lose money. Sure, you don't win money, but remember, as a new trader, you will lose way more often than you will win. So please do pay attention to that stuff. So, anyways, here is the finishing of the commentary from Zero Hedge. So while it all well and good to mock the likes of Dave Portnoy, who has become the poster child for the current round of speculative mania, whether for real or otherwise, the fact of the matter is that the dollar being levered into worthless stocks are real to many people, and when this liquidity fueled, I'm not going to say the word, ends, they will be held to pay. And this time, everyone knows Fed is responsible for enabling it. And they're saying that the Fed is responsible for enabling it because they're printing money like crazy, they're lowering things like crazy. And so you got to pay attention. You got to be very, very careful, y'all. Very careful. I know people are saying, trading into this is so exciting. Investing is not supposed to be exciting. I've said it before. I'm going to say it again. I'm going to repeat it until people start understanding. Investing is meant to be boring. It's not meant to get your blood boiling up or get you so excited. It's not meant for you to jump for joy when you win and commit suicide when you don't. It's not worth it. It's simply not worth it. Please do hear me out. Please do hear me out. So if you're gonna go and do stuff, of course, hey, I'm not, I'm not gonna tell anybody what to do or what not to do, right? It's your life and you gotta live it. But at the same time, you do need to be careful. And I do believe that the best place, if you want to invest, that $1,000 that the government gave you, put $1,000 towards your education because it's going to come back tenfold. You know, I went in and was investing in the markets in the 2005, 6, 7 fiasco without education. Now, of course, by that point, I had my bachelor's in business, I had my MBA. I mean, I thought I knew everything. But I went in, I didn't know how to trade. I didn't understand stuff. I didn't know how things work. So I was doing, the same thing, like buy, like it never goes down. This is amazing. I'm a genius. But then the genius turned into a complete idiot because I lost everything, found myself deeply in debt, and I was severely depressed. Thankfully, I mean, I had thought about committing suicide. I won't lie. Um, it was actually thinking of my mom and the news that she would get, um, and how painful that would be for her, that made me not go forward with it. So it was really, I owe today's life to my mother. And I am forever grateful for her, in so many different ways. But that is one of many, 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 many reasons for it. And what I did is I then ended up going and started to talk about it and started to teach people. And I didn't do it at first because I was ashamed at first. But then I realized, people can learn from my lessons. People can learn I can help people. And I went out there and I studied, and I started to buy books and read them. And instead of watching Netflix, I read, which Netflix didn't even exist at that time. Well, it did with the DVD in the mail thing. Yeah, it did actually, DVD in the mail, not like today the way Netflix. Um, and I studied. I studied. I mean, I read for 10, 12 hours a day. I would read a book in a weekend and then get a new one next weekend. And, I went to seminars and webinars and attended all kinds of different things and slowly started to emerge into things because I understood that I didn't know anything. So that is my hope for you, is that you will go in and study. Okay, changing topics slightly and a short hydration. Let's talk about Bitcoin. So, excuse me, there is a good chance that the monster move is going to come in Bitcoin. And so here we're going to listen. We're going to read through what they're basically saying. So it's coming to the pivotal bit point. And there's two types of opinions that are happening. On one side, they're basically saying it's going to go up. On the other side, there's going to go down. Whichever way it goes, it is going to be a massive move. Okay, so let's read a little bit and then we're going to talk about it. So the price of Bitcoin has been seeing low volatility, narrow range over the past 6 weeks or so, trading between 93 to 9,900 range for the most of the time. This is leading traders to warn it's likely to cause a massive price movement in the near term. Please understand, when folks say near term, that doesn't mean today, that doesn't mean this hour, that means over the next, week, uh, potentially even 3 months, right? So that's what short term typically means. Now, I don't know if that's what these folks are meaning because I didn't talk to them. Obviously, I'm reading the report. Uh, but that's what typically short term is, right? In these markets, anything when you talk about investing and trading and that kind of stuff, anything that is short term, we're talking 6 to 12 months, right? Anything past that is sort of midterm, and then long term, we're talking years. Okay, so I just want you to understand what that means. Okay, so what they're basically saying is that it's narrowing down. So typically, what you end up seeing. Let me change this so you can see me a little bit bigger. Typically, what you end up seeing is that the trading will go really violent, right? Like price movements are up and down multiple percentage points, and then it sort of starts slowing down, and it almost goes into the flat line, right? It doesn't exactly go flat, but like it kind of goes that way. When that ends up happening, it typically forms the triangle pattern, right? And I don't know if I'm showing the triangle, but I you know what the triangle pattern looks like, right? So it goes this way and it kind of goes in. So once it hits that triangle pattern, it has two options. It can stay flat, highly, highly, highly unlikely. Much more likely scenario is it's going to shoot up or shoot down. Now, we don't know necessarily exactly where it's going to go, right? But that's one of those things that it makes it very interesting where traders enjoy that stuff because they can potentially make or lose money if you don't know what you're doing. So you gotta study, you gotta learn how to actually do this stuff where you position yourself on both. So what they're saying is two short-term scenarios for the top-ranked digital asset in coin market cap. One is a rejection at 9,200, which will be followed by a fall to the 7,000s. And the other would entail the price holding 92 and then retesting 10,500 to potentially see the start of newfound rally. All right. So let's go into Bitcoin market cap. Come on. Coin market cap. All right. Let's go into this stuff. My apologies. But I didn't even think to do this. No. Let's go. Come on, work with me. It keeps moving. You saw that, right? Okay, so let's take a look. This is what we're talking volatile. Okay, let's go into 1 month. All right. It doesn't give us candles or anything like that, which it's fine, I guess. So what they're saying, you see kind of how the volatility, this is the price over here, this is the market cap over here, and you see kind of how the price has been sort of like it's not as volatile. There's the BART. All right, let's take a look at the 3 month. There we go. So 3 month, like it has been going up, but it has it doesn't give, it only gives so many options here. I'm sure that there's much better charts, but I didn't pull it up, so my apologies. But you can kind of see here between, we can even call it right about here. So what date was this? This was April 29th. So basically from May up until now, for the last 2 months, you see kind of how it hasn't been really going much of anywhere. Kind of goes up, kind of comes down, kind of goes up, kind of comes down. And the blue line is market cap. The green line is the price. So you can see they're very, very correlated. And you can see that it's kind of going sideways. Now, what they're basically saying is that, if it goes, if it doesn't hold on to that 9,200, and again, this is a horrible view, it may go down. And so you can see that it dipped. Let's go to the 7 days so you can kind of see it better. So you can kind of see the price. Oh, I wish it would stop showing that stuff. But the green line, right? You can kind of see how it's going sideways. Then it sort of went down June 12th-ish, right? Then it's kind of going sideways again, going down. It dipped to 9,000. It came back to 90, some 91, 92, something like that, 91.50, 91.70, and it's turning back down. So if we go to the 1 day, it's much easier to see. You see how it's going? Dipped, okay? We touched on just under 9,000. It went back up. You can see that it was what, 91.74, came back down, dipped. So there is a potential that it might turn and it go down. And as they were talking about it, they're basically saying, around 7,000. So that 6 to 7,000, it wouldn't be completely unheard of. Okay, so just something for you to pay attention to. My biggest goal here is and I haven't shown you anything. Wow, because I haven't changed the screen. My gosh, I'm sorry. So this is the 3 month that we were looking at. Okay, and it's going up. And this is the part where I was saying right here from like April 29th or so, it's going sideways. And then if you go into 1 month, you can see kind of how it is this sideways. 7 days, it shows you side, down, side, down. Okay, that's a trend. That's a trend, sides down, and this is kind of what we were talking about. So anyways, my apologies for forgetting to change the stuff on you. So I'll try better next time. Okay, so whichever direction the price heads in the upcoming years, analysts anticipate high volatile trend for the cryptocurrency market. Now, the volatility is very good for traders, okay? If you're brand new, I don't recommend trading for the same reasons that I just shared earlier, okay? Just dollar cost average, if you want to wait to this sort of consolidate, go for it. But that's my best advice that I can give to people. Obviously not financial advice, do whatever you want, but that's sort of the way that I would approach it. That's the way that I coach my kiddos when they start getting into the market. Okay, so they are basically saying that it is going to get ready for the explosive action. Now this is Petra Hoody, a Bitcoin trader who predicted the steep downtrend of Bitcoin as early as February. And he explained that the technical structure Bitcoin is now portraying is either triple top at the range lock. And we can go in and take a look. All right. And let me see. Let's zoom in this a little bit. Can we zoom in? No, we can't. Okay. It is what it is, as they say. But you can see definitely how you have this key level right here, right, of 94.29. And you can see that it was acting as a support back in July and September of last year. We broke underneath it. Then it became a ceiling, right? This is the resistance. So support or floor also can become resistance or ceiling. So when it breaks over, it typically tends to trade, and then it can act as a floor, as a meaning like it will come in and bounce off of it. Typically, if it breaks through it, it goes much, much lower. Now, this is not 100% proof science, but it's more likely than not. Whenever we're talking anything in investing or trading, we're always dealing with probabilities and possibilities, not uncertainties. Okay, so just understand that. So you saw kind of how it broke, and then this became resistance. You hit it, it came back even lower. Okay, then it broke it for a little while, and then came back down, trading super low. This was in March of this year, right? Then it was going up quite a bit, and now you can see kind of how it's flirting around this part. Now, you will see that the 10,000, which I can't draw the line over here, but you can see that the 10,000 right over here is almost like another sort of resistance level where it would come in, maybe slightly break and come back down, or come hit it and bounce. And then it would come back to this 94 level, maybe a little bit lower, come back. So it's been definitely flirting around here. What they're saying is that, at some point, and if you were to draw the lines over here and the lines over here, which you can't really see, and I can't really draw them here, so my apologies. My computer is smart, but it's not that smart. Well, I'm in the wrong view. I'm in the wrong thing, right? I'm trying to draw on a picture on a screen. That doesn't work. But anyways, you can definitely see kind of how he has this slightly down pattern, and this one is definitely up pattern. And so that has a potential to either go high up or high down. All right. So the price of Bitcoin rejected a 10.5 in October 2019, February 2020, and June 2020. So that's what they're saying. That's that triple top, okay? Triple top. Triple top is typically, when it comes to trading, triple top typically means we're going down. And we're going down quite a bit. So, and that's what they're saying here. A triple top formation, which is typically a bearish pattern. If the price of Bitcoin continues to fall in the upcoming weeks and confirms that it is a triple top, Panther Hoodie warned BTC could drop as low as 6,000. And I absolutely agree. So when they were talking about 7,000 up here at the top, where was that? Remember, one rejection of 92 goes to 7. I do agree with this gentleman over here. I don't know who he is. I've never seen anything from him. But just looking at the stuff, that's kind of where my analysis was, that it might go, between 6 and 7,000. The analyst said, triple top on daily bearish pattern will trigger at close below 8,000 with the target to 6,000, either triple top or range lock. Bitcoin is also entering a fear zone on various investor sentiment indices, suggesting traders are becoming increasingly cautious on the short-term trend of BTC. And this was posted on Twitter by Byzantine General. Again, I don't know who that is, but it's showing the Bitcoin USD sort of price, right? You can see it over here, and you can see that this is from about 24th of May, roughly till about, 14th of June, so yesterday. And you can see kind of how it was, and then fear and greed index. And so he was using that to sort of portray it. Obviously, you can go see it on the trading view if you want to. So variables that may affect BTC in the near term. There are two main variables that may shift the price trend of BTC in June. One is the risk of miners selling more Bitcoin after a difficulty adjustment. And the second one is JP Morgan's surprising praise of the top currency. Now, One is obviously bearish, one is obviously bullish. Bearish meaning going down, bullish meaning it's going up. If miners are selling, obviously the price is going to go down if there's not as many buyers to sort of meet the demand. If more people jump into the market because of JP Morgan's sort of praise of the cryptocurrency. I mean, they did a 360 or 180. 360 is back to the same thing. So maybe 180, 180, complete opposite, right? Uh, then more people might jump in, which means higher demand, which could potentially push the price up, unless, but you could also see where you're going to have the miners selling and the new people kind of coming in, at which point the supply and demand could be met. And so we could see more of this sideways moves. Okay. So that's kind of what they're basically saying. But they're also talking about the mining difficulty of Bitcoin set to increase by 13% within the next 3 days, meaning there will be a significant increase in the cost of mining. This may apply additional selling pressure on the Bitcoin market, amplifying the short-term bearish scenario. So there you go. That's sort of the news. As you can see, I said that I'm a bit bearish, short term only. All right. Before you send me hate mail, short term only, I am definitely bearish on Bitcoin. Okay. And but long term, I'm incredibly bullish. So I do expect the price to go down in the short term. But again, not a trading advice, not an investing advice by no means. It's just sort of how I see the market. But I'm curious to know. So in the chat, or if you're watching this on YouTube because you didn't make it to the 7 a.m. live show on onedealaway.com, put the comments and do subscribe to the channel. Okay. But I do hope that at some point you will get up early. You will be able to come in and watch live so that we can hang out and I can do a live Q&A. All right. So let's finalize the whole process and talk about a couple more things when it comes to business. All right. And so changing gears, but we're going to wrap it up with what's happening in business and technology. Let's talk business, as they say. Zoom just gave free users frightening news and other small business tech news. This is coming directly from Forbes. And so here we go. We got 5 different things. And before we go into all 5, I'm actually going to talk about something very interesting. If you are heartbroken about Zoom, you got options. That's all I'm going to say. You got options, and we're going to talk about one of the options today. Zoom just announced this past week that those who use the video platform for free will no longer have encrypted calls. Okay? And they're saying that this new change will happen sooner rather than later. The reason behind the change is that they want to be able to comply with the law enforcement agencies as well as FBI in the event that Zoom would be used for malicious reasons. Now I'm going to pause over here for a moment and let's think out loud. Could Zoom calls be used for malicious reasons? Sure, anything could, right? Email can, letters can. I work in higher education. We always got to have a conversation like, what is a weapon? I'm like, a chair can be a chair, right? Which is a tool to sit in a classroom and learn. But if you pick it up and throw it at somebody, now it's a weapon, right? So anything can be weaponized, is what I'm saying. Anything can be used for malicious reasons. And here's the part that doesn't make sense to me. I personally think that the reason they're doing this stuff is to push those free users to become paid users. It's a marketing stunt to convert more people into the paid users because that boosts their revenue. Okay, that's my personal opinion. I could be wrong. You let me know what your opinion is. And here's my reasoning behind it. If I am a bad guy, right, and I am creating some sort of plot to take over, I don't even know what. My brain doesn't work that way. So, whatever, right? Um, Generally speaking, I might have some sort of dirty money lying around, right? So that means I can probably afford $15 a month to pay for the service where everything is encrypted, right? To have those kinds of conversations. So to me, it doesn't make sense, all right? Because, it doesn't make sense. There's also other ways where I could use some of the encrypted free services to be able to do that stuff. So their reasoning makes zero sense to me. And the gentleman writing this stuff is saying, maybe Zoom could ask the same info for the users, give them a same encryption as the paid users, because the Zoom said, well, the only thing that they give us is an email. Okay, well then ask for more information. Ask for name and email and address, right? Like if the KYC, as they say, know your customer, is the problem of why you can't provide encryption, then just ask them for that information and give them an option saying, you know what, if you provide this, we'll encrypt your calls even though they're free. Okay. But what he's saying is this is more of a marketing tactic than compliance concern. And for that reason, I'm beginning to become just a little more wary of Zoom. And it's very interesting. Zoom was like the hottest thing. I was actually quite excited about Zoom when it first came out, and I absolutely loved it. I still enjoy it quite a bit, but I've been having a lot of challenges lately with Zoom. For example, the encryptions are happening so crazy that I've actually tried to. Typically, when I do my coaching and mentoring, a lot of group calls and stuff, I've been using Zoom, and it was awesome. It was amazing. I do have paid service and paid subscription stuff. But like last week or whatever, I had a call with the mentee, had a coaching call with the mentee. 30 minutes we spent trying to get him into the Zoom call, and we couldn't because, even though I gave him the password, even though I sent him the link, even though, like we tried all kinds of different things, the solution at the end of the day, want to know what we did? We switched to Skype. Yep. Switched to Skype. Call went like this. It was beautiful. It was seamless. It worked. And now I'm thinking, do I want to continue paying for Zoom? And, probably not. I am actually probably going to be switching out of Zoom for this very reason. It's making it very hard for me to try to navigate. They keep switching stuff and pushing it onto you, whether you want it or not, change it around all the time. And, now if I can't get people and clients into the calls and I can't help people and can't do the stuff, then why the heck do I have it, right? Obviously can't do some stuff with Skype, but there is something you can do. And enter Microsoft to knock Zoom out of the park with the new features you need now. This is also coming out of Forbes. Microsoft has just launched a bunch of new Teams features as it aims to knock Zoom out of the park. Microsoft made this Team video conferencing service even better with the new features for free users that could knock Zoom right out of the park. So, opportunity to use your own logo as a picture, as a background. Very cool for marketing purposes. Second feature is the ability to schedule meetings and send an invitation in advance, just like Zoom, right? But it's now part of the free. Previously, you could only use Meet Now. Now you can actually schedule it, and you can send it directly to them. Now, what they're being rolled out for users is they're saying it's coming for the current users and then launched to for new team users. Now, what they're saying is the ability to schedule the meeting with the free Microsoft Team option beats Zoom because the latter only offers free video chat for up to 45 minutes. And it sounds like Team is, whatever. There's no limit to it. So I don't know. I've never used Teams, but I'm actually going to be checking them out for sure. And another Teams feature is the ability to turn on live captions during the calls and meetings. That's actually pretty cool. I do have to say that is really, really cool. Over the last few months, Microsoft has been taking advantage of Zoom's misfortunes by promoting the security and privacy credentials of its team video conferencing platform. Ability to display more than 9 participants is also another piece that they're saying is a benefit. So there's a lot of benefits to Teams. I haven't used them. I'll be honest. Why lie, right? So I haven't used them, but I think it's going to be definitely something I'm going to check out, especially since the latest fiasco of me struggling to get my mentee into the call for us to be able to talk and connect. So I didn't enjoy that. It was stressful for me. It was stressful for him. And we wasted a lot of time. We wasted 25 minutes just trying to connect when we finally gave up. And I said, you know what? We're going Skype. Forget it. Forget it. We're going to Skype. So Anyways, all right, let's finish up, and then that's going to be that for today. I have a couple more news stories very quickly for the reasons that you need to continue to learn, study, and pay attention. First one is a small business recently paid $150,000 ransom after attack. Basically, what happened is they hacked into their computers and then they held it a ransom. Then the company had to go in, work with a negotiation third party company, finally paying 150K and got their computers back. Why is this important to the business? If you haven't installed the security, you got to do that stuff. You got to make sure you pay attention to your security devices, do backups online, offline, make sure you secure your data and everything else. Pay for training and verify everybody's running the most up to date operating systems. You got to keep on upgrading. Cash payments have plummeted thanks to the pandemic. So, research released in Australia this past week revealed that since the start of COVID-19, the use of cash payments has greatly decreased. A survey conducted by the RBA showed that last year, one third of participants did not use cash, while only 10% those participating in the survey used cash consistently. Similarly, the use of checks has gone down by 20% each year and increased 40% for the pandemic. So they're saying, why is this important? Well, it's important to you so that you can actually install different payments and stuff. But for me, this is important and crucial to basically say, we're going digital. It's not coming back. We're going to be using QR codes and apps and different ways to pay, and it's all going to go crypto, which is one of the reasons why I am so bullish on crypto. Anyways, MIT's tiny artificial brain chip could bring supercomputer smarts to mobile devices. MIT has announced that their research team recently published work detailing an artificial brain chip that could potentially allow mobile devices to perform at the level of supercomputer. This is amazing. This is amazing. Just imagine. Soon enough, our little uh, uh, phones are going to be basically operating ridiculous tasks, even more than you ever thought possible. And what they're saying, the chip, which could be even smaller than one speck of confetti, would be able to assist in developing technology that could adequately handle higher order AI calculation locally on devices, but still be little inefficiently used to power. So this is amazing, and it negates the need to connect to data. Pretty cool, right? So you don't even have to be online to do stuff. Like it would just kind of do that stuff, and it will work with your current power in the phone. And then finally, YouTube is working to operate in a more transparent manner when it comes to how channels are made to make money while providing stricter guidelines on the kinds of content advertisers will be more willing to pay to have ads on. So, what he's saying, why is it important to business? If your business is trying to monetize YouTube, it is important to stay up to date on their latest guides and announcements. I'm doing the same for my YouTube, and I'm quickly discovering that it's almost a full time job. I am not doing the same for my YouTube. I am committed to keeping my YouTube free of ads. If you do like that, if you do enjoy the fact that I am not going to go into the ads for as long as I can, meaning as long as YouTube doesn't force me, as long as they don't make me, I will absolutely keep my YouTube channel free of ads. And if you'd like to support that, I invite you to visit onedealaway.com/live and do support it. You can donate fiat, or you can donate crypto if you want to the channel. And of course, I'm going to be putting some of my links and keys in the description as well. So if having an ad-free channel that focuses on bringing in news, providing education, and sometimes potentially, hopefully, funny commentary, then do consider donating to the channel. So, YouTube, thank you for watching. We're signing off. Until next time, stay forever money blessed. And do remember, you are only one deal away.